Hey guys, how's it going? I wanna recap the trade that I made today on my Twitter account. And if you guys don't know, I used to give free trade alerts on my stock tweets, and basically what happened is like they saw my activity as spam or whatever, so they decided to block me. But whatever, I mean, I'm on Twitter now. Twitter doesn't have a problem with my activity, so you guys can follow me on Twitter. It's the same thing. The only thing I liked about StockWiz is just showed like how much percentage you've made on the trade, so it's like kind of a proof. But at the same time, on Twitter, when I alert a stock, you can look on the time that I alerted it and the time on the chart too. But the cool thing about my alerts is basically if you follow my system and you watch my videos and you try to implicate my strategies, it'll be easier for you to follow my alerts. So check this out, guys. This is CIDM. And I want to start with this recap and tell you guys that like today it was like a day in the market. It's a Friday, right? But it was a day in the market, one of those days that you don't have a lot of like runners that are 100% or more. Most of the runners happened in the pre-market hours, and then when the market opened, like not a lot of stocks. There wasn't any stocks that was on the 100%. So there are some days like that that are lower on volume, and there's less news and less things that spike. And we came across a stock, CIDM. It's a stock that had not major news. They just had like one of their shareholders basically made a deal to replace their debt into equity. And it's whatever. I mean, it's some news like that. It's not something that will push the price into the moon or anything, but it does work with the view up in here. Now, I want you guys to check it out. So we've talked a lot about it so many times. I use only Thinkorswim. What we're looking at right now is Thinkorswim by TD Ameritrade. And I only use one indicator, and that indicator is VWAP. And of course, I use the volume as well because the volume tells us so much. But the VWAP actually works with the volume. It's VWAP stands for volume weighted average price. Now, if you guys are new and if you haven't seen it before, I have like 2 videos about VWAP already, and I basically talk about VWAP in almost every video that I do because that's the only indicator that I use. I don't use like any MACDs, I don't use RSIs, I don't need any of them. I trade mostly penny stocks, pump and dumps. It doesn't have to be a penny stock, but micro caps and stocks that like for companies that are under 1 billion market cap and sometimes even more than that. But basically, I'm a momentum trader, right? And for momentum trading, in my opinion, VWAP is the best. I mean, that's the only indicator you really have to use. It helps you translate the situation. It helps you translate the trade better. So I want you guys to look at the VWAP activity that we had. So first of all, I want you guys to remember. So the day, it's the morning. It's like before 7, before 9 Eastern time. Before 10 Eastern time. Like before 30 minutes after the market opened. So the market just opened, right? There isn't any stocks that are above 100%. That went up 100%. So there isn't like there isn't like a lot of volatility that goes on in the market. But then there's a stock that's like slightly spiking, CIDM. So a mistake that a lot of people would do is basically just buy the stock with no system. But I have a system, especially for these stocks, the super volatile stocks. And what I liked about it, like the main thing that I liked about it is like it traded on the upper bands of the VWAP. So again, if you guys already use the VWAP, know the VWAP, heard about the VWAP, on Thinkorswim, when you add the VWAP study, you have 3 bands. You have the upper band, the middle band, and the lower band. If you're using any other platform, I'm pretty sure the VWAP that you get is just like the middle band. But on Thinkorswim, it's basically 3 bands, and it helps translate the situation so good. And basically what we see in here is that like the trading activity was made mostly above the VWAP lines. So it means that the volume is above average and there's a lot of buying orders. But at the same time, I want to enter when I know that like the stock is going to go up in price. I don't want to enter and like know that there's a lot of resistance and it might sell off and I would lose a lot of money. So my system, my situation, what I like to do is I'm waiting for volume. And another thing that I'm looking at all the stats. I'm looking at like what's the short float, what's the float of the stock, all the things that I talked about in my previous videos. But another thing that's very important for me is pre-market walls. So there's a lot of stocks that, you know, would have like a crazy activity pre-market, and then when the market opens, they're like maybe 30% down the highest point of the pre-market. So what it means is basically that there's a lot of walls and there's a lot of resistance, and you know it might affect the breakout of the stock. But in here we have something that's completely like haven't been touched pre-market. The most of the activity started at 10 10 Eastern time or 7 p.m. West Coast time. So basically, when I alerted it, it was around these areas. So again, we're seeing like about 20-30% above the VWAP levels, the actual VWAP. So the activity is basically being super bullish. And what we're going to do in situations like that, I'll show you this a little bit clearer, because I want to be more like only focused on the chart right now. So again, remember, like trading is not only about charts, obviously. You have news, you have technique, you have so many things that like indicate if you should buy or sell. But in here, I basically went for a momentum day trade. And what I did is like, just like I said, I analyze in here and I see that like the stock is traded like above the middle VWAP band. And what I'm looking for is for it to break the highest point of the day. And at that time, before, so these are my two entries, right? And back at that time, before I did my first entry, that was the highest point, closer to the 95 cents. So another thing that would really matter is like previous resistance points, and you know, looking at the all-time charts as well. But it also it depends on the day. So this stock is like traded under $2, and I usually like never touch these stocks. I don't like to trade stocks that are under $2. So if there's gonna be days that there is a lot of like pre-market runners and daily runners, I will not touch stocks like that. But because this day we didn't have any like high runners, we didn't have anything too explosive, I trade this. And why you shouldn't trade stocks under $2? Well, there's just too much volatility. There is way too much volatility, and it's way harder to predict. In my opinion, that's what I just like. If you see like on stocks that are under $2, you would see a lot of like candles that extend crazily, you know, to activate orders. Because in the end, you know, if you're not an active trader and you don't know that, there is a lot of orders that are waiting to be filled. If it's like stop loss orders, if it's buy orders, stop entry orders. So my like what I'm trying to do when I'm like doing my momentum trades is like predict those orders and, you know, try to get in and out with them. Because I mean, in the end, you want to get in where anyone else, like everybody else, is getting in. Okay, if you get into a trade and you lose money, it's probably because you bought something that no one else wants to buy, or you bought something that people, like other people, are going to stop loss on. So, you know, it's going to push the price down. But in here, it's a momentum trade. It's fresh. The stock was under $1, and it was also under like 100% profit on the day. So the highest point of the day was under the 95 cent. And I realized, like, I decided that I'm going to get into like with 10,000 shares at the 95 levels. And that's where I saw like basically previous resistance from the day. And there's also another thing that we're looking at is a U shape. And like it basically means that like you had the highest point of the day and then a little bit of a sell off that's going to be just like a U shape into creating highest highs. So right in here, as we see, like what we look at is basically like we have a U shape, and then it broke the highest point of the day, and it broke down. It broke up, like it went up in price. So before, like when I was in those areas and I looked at it, I predicted that there is going to be a U-shaped momentum, there is going to be a U-shaped move. But you know, some traders will try to buy it in these areas for a dip buy, and that's a little bit risky because, you know, it might just sell off. You don't really know what's going to happen. What I like to do, and I already made a video about it, it's called stop entry, the day trading strategy video, is basically like I try to enter on the highest point of the day, and then, you know, position adjustment. You know, I won't just like have one position, you know, one entry and one exit. I like to adjust my positions just like I explained. So my first entry was when it broke the highest point of the day in a U shape. And basically we can see in here it's a green candle, huge green candle above the highest point of the day. And it got to levels that's close to $1. So I entered with 10,000 shares in this point because I knew that there's going to be some sort of a breakout. So after I entered in here, I was ready to place a stop, like a more like a mental stop, like just in case the stock is going to fall down, and either sell a quarter of my shares, if something happens. But like we want to be prepared for everything. So another thing that I noticed from the market is like stocks that are under $1, especially like when you have days that like you don't have any stocks that are above like $2-3 that are spiking. When you have days with less stocks that are spiking, you have a stock that's under $1. When it passes the dollar mark, there is going to be a lot of people that buy it. So that's why, like, from assessing the situation in particular, I already have 10,000 shares that I entered in 95 cents. Now there's going to be a lot of momentum since there isn't like any other momentum trades for the day. So I entered with 30,000 shares above the $1 mark. So check this out, guys. I already entered above 95 cents with 10,000 shares, about like 9,500. And then in the dollar mark, I entered with 30,000 shares. So that's $30,000. So the total position was $39,500, right? So unlike, I'm not trying to be a noob trader. I'm not trying to be like a, unsystematic trader. I am a profitable day trader, and I know what I'm doing. Like I have a system that I exposed already in my setup in my video, so you can check it out. But yeah, I wouldn't drop 40, 100,000, 10,000, or even 1,000 on a point that's like a gamble point that I'm like, oh yeah, it's on a uptrend, so it can't. No, I want a confirmation. So for me, some sort of a confirmation is a stop entry order, because just like I explained, there's a lot of orders that are waiting to be filled. So experienced traders would have orders in this area above the highest point of the day. Not all the time, but most of the time. It also depends on the momentum. It also depends on many other things like volume, how overextended the stock is. So it's not something that we want to rely on 100%, but it's something that we want to keep in mind, that there is a strategy. Like for me, when I see a huge U shape and then the stock is getting closer to the highest point of the day, I would like to place a stop entry order above that point. And if you guys don't know what a stop entry order is, it's basically, you can have an order where you buy and then you place a market, basically buy market instead of like limit or stop. And then you can have a buy stop. So basically your stop is an activation price. Now, a lot of people know stop as stop loss, when you buy a stock and then you place a stop sell end order. So basically, if a stock falls down 5%, 10% from the price you bought it, it's going to automatically sell. But stop entry order is the opposite. You basically, when you want to enter a stock that's going up, but you want to make sure that it's going to go up 100%, you place a stop entry order in the area that you feel like it's a resistance point, right? So that's when it's like the cool part enters, because not just you, a lot of other traders are going to think that this is a resistance point. So they're going to place a stop entry order in that area too. And that's what's going to make the price go up or down. It's not going to be 100%. Sometimes, you're going to have something that's like really close to the price. So I like, sometimes I would put like under the highest point of the day. Sometimes I would put above it. It's like it's something that related more to experience and, day trading a lot. So, when you are going to day trade a lot with time and experience, you will see more consistency in doing that. But that's already a strategy that you can begin and profit from, because just like I said, a lot of other traders are going to have orders waiting to be filled. So if you find yourself where these other traders are having these orders, you can enter with these orders, and like $1 million, $2 million can be entered into that stock while you enter with a stop entry. But again, we have a U-shaped move. One second, I want to get a little bit closer so you guys can see. So we have a U-shaped move. I enter my first entry. My first entry is only like it was like less than 20% of what I wanted to really like invest in the stock. And then when it broke the $1, that's when I had most of my money, $30,000. Now check this out. When I enter at this point, it's basically like this: when the order is executed, order is filled, I bought the stock. I have the stock, like I have 40,000 shares, 10,000 shares from here, 30,000 shares from here. What do? I instantly sell it on the spot. So you can see in here like a small red candle from my sell, and I basically like I sold it when like the candle was more in the 1.4 levels, like touching the 1.4 levels, but my execution price was 1.3. So basically, I have 10,000 shares that I bought in 95 cents, and I have 30,000 shares that I bought in $1, and I sold all my position at 1.3. That's basically position adjustment, and just like I explained, it's not going to work the same way in every stock, but with your experience trading the top 5 stocks of the day, you will learn how to adjust yourself and your trading into it. So basically, guys, this is something that I alerted on my Twitter twice. So follow me on Twitter for free trade alerts. I will have more of these trade recaps. I will try to give you guys more tips to improve your trading, because trading could be a little bit simpler if you think outside the box and you do creative things to make money. And it's something that will just happen with experience. So you have to learn, and experience. And then you will, like, your trading will naturally improve. And I've been having so much fun in the market, guys. So I'll continue with the alerts and everything. And thanks for all the new followers on Twitter. I'm not on StockTwits no more. Unfortunately, I had like 4,000 followers on StockTwits, and most of my subscribers on YouTube came from StockTwits. So it's kind of sad, but a new beginning on Twitter. I know on Twitter there's more people, so I can have more followers in the end. So that's a cool thing. So follow my Twitter for free trader alerts, just like I explained. And thank you guys for watching the video. Until the next one, peace.